Taiwanese index is trading with cuts of around 0.4%.
Today, the patient and the hospital interest are at conflict.
Now on the Nifty, a decisive break above 24,174, which we did not do yesterday, it's 30 points now, would indicate further up move.
There's an attempt to sort of put a bit of a cap on this daily options activity which is happening.
We've targeted to keep a range of 12 to 15% growth at the minimum.
So first rates, 24,189, almost 24,200.
It's a very large industry, and if it grows at 8%, it has got very good consequential impact.
The object of the issue is to pay off the debt, so we see that happening immediately.
Lesser bears, far more many bulls that we can spot on our screen.
Hindenburg says SEBI notice outlines suspected violations of Indian regulations.
MF Lite, a streamlined version of the mutual fund regulations designed specifically for fund houses focusing on passive schemes.
It's a big shade of red, and Nifty is off around 120 points from the highs of the day.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, it's a unexciting kind of a day. Let me put it that way. This is Closing Bell. We're coming to you live as always from the CNBC-TV18 Motilal Oswal studios. And you saw that wrap of the day, right? And not very much has actually happened through the beginning, through the course of what we had. I mean, actually, the only excitement that we had, a bit of flutter, was right at the word go, the open, and that was basically the gap up, the day's highest point. And after that, it's been a very middling kind of session. I'm Prashant. With me, my colleagues Reema. Surabhi is back from a short break. And Nigel, of course, is joining us from the newsroom floor. Guys, hi, good afternoon.
Good afternoon. And since I'm back, I get to have the second word after Prashant. Prashant, unexcited. That's the problem with this market. It gets you used to seeing new highs every day, new flutter, new stocks, moving up in double digits. That's why our definitions change.
You can report on a market, roaring market. You can report on a market which is down and out. But to report on something which is, 10 points, 15 points. I mean,
but to be fair, the outcome is, 10 points here and there. Yeah. Through the day, at least in the morning, there was that volatility. The Nifty's moved in a 200-point range.
Yeah.
So it's not insignificant, the kind of moves that we've seen. First up, then down, then up, then down, and now flat.
Well, we had those many moves. It just seems... anyway, okay, 10 points basically to show for it day on day. That's essentially what you've had. And the Nifty Bank will come up on your screen. Actually, the Nifty is okay. I mean, it's flat, right? Unchanged almost compared to where we left off. But the Nifty Bank is down more significantly. It's down 0.75%. It was in the morning, in the first couple of hours, it was just Kotak Bank. But then you got a bunch of others. ICICI is down a little bit and a few others as well. But it's the PSU Bank Index, the Nifty PSU Bank Index. The last I saw was down a 1.5%. Is the top sectoral loser, 1.6 now, top sectoral loser across the board. So that's the other thing. We are holding just above the 20-hourly moving average, 20-hourly simple average, beg your pardon, not moving, for the Nifty, which is about 24,060-ish, 61. That's the exact number. And that's the immediate support, right? I mean, you've got to look at some of these very short-term averages. But we're kind of respecting that. For the Nifty Bank, that is gone. The 20 is gone, and now we look at the 40-hourly average. That is a little lower for the Nifty Bank from where we are. So let's see if things stabilize over the next 60 minutes, or in the Nifty Bank especially, there is a bit of a crack, which means that we've got to start to look at perhaps lower levels. Market breadth is almost absolutely evenly matched. One stock up to one stock down, and that's what's going on. Mid caps are down about 0.4, 0.5%. I think the index, that is, small caps are not doing very much. So microcap index saw a big 2.5%, 3% move yesterday. That is taking a bit of a break as well. So, not really going on, not really that much happening as we begin the last 60 minutes here.
Banks are down 400 points on the index level despite HDFC Bank doing well. So HDFC Bank is a gain of 1.5%, adding on to the rally from yesterday. So if you pull up the banks, it's Kotak Mahindra Bank and IndusInd Bank and ICICI Bank where there is pressure, but HDFC Bank continues to see buying. Other than that, the two sectors where there is a fair amount of green. One is IT for the second day in a row, and the other one is real estate. And in IT, it's large cap names like Wipro, Infy leading the charge, and Coforge in the mid cap space, where there is a lot of buying. And the top nifty gainer today is Larsen & Toubro.
Absolutely. L&T's had quite a strong run throughout the session today. On the mid-cap screen, I mean, obviously there is underperformance. The index is cooling off, dealing with a blow of about 0.75% right now. And if you talk about the stocks where sort of some of the fizz is coming off, you have names like Manappuram, IDFC, Vodafone Idea, about, after the huge moves we've seen in the telecom space in the last few sessions. So these are the names on the lower side. But it's, on the price plus volume charts, there are no massive declines. It's just that some of these names, including some of the PSUs like BHEL, they continue to cool off. However, we've had some interesting moves today on the mid-cap screen as well in terms of news. There's DCX Systems, there's transformers and rectifiers. We actually spoke with the company in trading hour today, sounding extremely optimistic about their prospects and improving revenue and margin expectations for this year. So that stock, for instance, is up 5%. Today's listing, Allied Blenders, has had a decent start, 12% higher there as well. So not bad, but yes, at the headline level, it's a market that's consolidating. And Nigel, maybe, not such a bad thing.
Well, that's right. And if you're calling it a bit of a boring day, maybe you'll have to think again. The Nifty Financial Services Index will play out the weekly expiry in the next 60 minutes or so. So let's see whether or not it got some excitement for us. It's currently down. The Nifty Bank itself is down close to around 0.8%, but it's recovered a little bit from the low point of the day. Let's get in Mitesh Thakkar first for the call on the index, and then we'll get to his stocks. Hi, Mitesh. Good afternoon. Good to see you in. Well, what's the call on the Nifty? We are in a flattish, after a while, we're enjoying a bit of a flattish day. What's the trade out there?
Yeah. Well, Nigel, I think, I've talked about the fact that the Bank Nifty was looking, vulnerable in the sense that on the intraday charts, there was some signs of profit booking. I think that is the index which might face a bit more pressure and therefore keep the Nifty's movement into check, despite the fact that, Nifty IT, Nifty FMCG is slightly on the stronger side. So the idea is that, look for shorting opportunities either in the Bank Nifty, disclaimer, I have some positions over there, or look at the constituents of Bank Nifty where you would want to take some shorts. So I have, in fact, Bank of India as a recommendation right now. Excuse me. So Bank of India, the recommendation, sell here with a stop at about 120.5 and look for a target of 110 on the downside. While on the upside, I think, we'll go with a buy on Wipro with a stop at about 530 for targets of 560.
Okay, thank you very much for that. Sell Bank of India, buy Wipro. We'll talk more about Wipro. There has been another upgrade on that. One by IIFL and the other one is by Nomura. But before that, Hindenburg has received a show cause notice from SEBI over alleged violations in placing bets on the Adani issue. Kotak Mahindra International has issued a response. Sudarshan has been tracking the story very closely, joins in with the latest. Sudarshan.
So Hindenburg Adani case is back in focus. So what has happened through the day? Hindenburg today early morning has come out with a disclosure saying it has received a show cause notice from Indian market regulator SEBI in Adani Group case. And remember in January 2023, this US-based firm had come out with a report on Adani Group alleging stock manipulation by Gautam Adani-led group companies. Now coming to the show cause notice details that Hindenburg says it received on June 27, there are three major points. Hindenburg says SEBI notice outlines suspected violations of Indian regulations. It mentions its relationship with an investor that expressed short position in Adani, and the report contains certain misrepresentation and inaccurate statements. On the issue of jurisdiction, it says, and I quote, much of the notice seemed designed to imply that our legal and disclosed investment stance was something secret or to advance legal arguments claiming jurisdiction over us. Note that we are a US-based research firm with zero Indian entities, employees, consultants or operations, and some of these arguments seem circular. For example, the regulator claimed that these disclaimers in our report were misleading because we were indirectly participating in the Indian securities market and therefore were short Adani. And about its relationship with an investor that expressed short position Adani, Hindenburg says, Kotak Bank created and oversaw the offshore fund structure used by its investor partner to bet against Adani. Now, Kotak Mahindra International has come out with a statement after on this Hindenburg issue. It says company and KIOF state that Hindenburg has never been a client of the firm or nor been an investor. Also, the fund was never aware that Hindenburg was a partner of any of its investors. Also, it has received a confirmation and declaration from the fund's investor that its investment were made as a principal and not on behalf of any other person. So, after this clarification, Kotak Mahindra stock has recovered almost 2% from intraday low.
Sudarshan, thank you very much for that. Gurmeet, you want to add your comments on this particular story?
No, not much to add. I would probably wait it out. I think doesn't look like prima facie that somebody with likes of Kotak to be involved in something serious like this. But it's not been a great year for the bank. First, the RBI action on the digital onboarding on liability side, and then this coming up. And previously, I think they had issues with RBI on the stake of the promoter. Then on succession planning, I think RBI was keen on an external candidate, and that's when Mr. Ashok Aswani from Barclays take over. So I think we'd wait it out, but the stock has been in this range now for more than a couple of years. So wait it out. I think at some point of time probably there'll be some value in the stock. But for now, I think it's something which is more regulatory in nature. It's not wise to second guess. There are banks. We made that point that financials were looking juicy when Bank Nifty was 48,000. We've seen a good run up led by SDFC, of course. I also think ICICI is due. It's consolidated in that 11,200 range for a very long time, and the operating metrics are industry leading. Amongst the mid-sized, like Federal Bank, Kerala based, almost 1,500 branches, and now they're getting this wholesale retail mix right. It almost now 50-50, and now they're focusing on the high yield segment more. Asset quality has always been pretty decent, so that should ease off some pressure on cost of funds. And if their recommendation goes through, and let's say if we have somebody like, let's say, KVS Manian joining, it's speculative right now, but if KVS Manian ex-Kotak joins Federal Bank, I think the bank would see some re-rating.
Okay, so that is the take on a couple of those stocks, including Federal Bank. By the way, the run-up on IT continues. Wipro is 2.5% higher. Infosys, I mean, that's actually the only counterweight for the market. The weakness in banks has been quite nicely offset by the IT big boys today, along with, of course, L&T. That's been a tale of two cities, so to speak. Just, specifically on Wipro, Gurmeet, hi, good afternoon. And I know Rima is going to talk more about it as we go forward. But the market has been abuzz ever since we got this double upgrade from CLSA, right, on Wipro. And I think in general, expectations are running pretty high. Do you think stock prices are baking in the right level of optimism and enthusiasm? Because we've gone through this pattern. We go into the season with great hopes. Companies come out and say absolutely nothing. They just say no change in environment, and then there's a cool off. So it's become a bit of a trading pattern. Do you think this time it will be different?
I don't think so, Sukhbir. You're right, actually. And when markets start looking at pockets which haven't gone up, also tells you that probably the legs are tiring now, right? So IT hadn't gone up. It was banks first, and now I think it's IT. I would want to wait for the management commentary. Is there any change in the yearly outlook, whether it is still flat or slow single digit? Because any optimism, if any, some of it is in the price. I think one large cap IT stock we like because of the the diverse revenue stream is HCL Tech. Because their IT services continues to, it could be single digit this year. The software business is doing very well. It's almost $1 billion business with 25% kind of PAT, which is much higher than almost if I say 60-70% higher than the IT services. Also the ERD business, it's more diversified, and the non-discretionary spend mix, if you see the revenue mix, is a touch higher compared to normal IT services. And I think we like now more software and platform businesses, as I made that point earlier. The market will something like a KPIT, which continues to do well. It's a great story. Something like platform businesses like Zomato, Policy Bazaar. So you got to probably move from IT services to software and platforms in IT. IT will remain dominant, as a theme concerned, but probably you need to do some bit of readjustments.
Right. Gurmeet, you like in the capital market space, you like CAMS, right? You own CAMS. Afternoon.
Yeah, Prashant, we own CDSL and CAMS both, and for a while now. And being in the industry, probably you have a bias also coming in. But valuations now are obviously as CDSL after obviously bonus announcement went up even more sharply. So for us it's a very 5-10 year old story. It's more like buy and forget, and any meaningful dips if you get, I think it will off. And I think other market participants, if there is any meaningful correction because of the recent SEBI guidelines on fixed charges and fixed slab should be charged rather than lot size based. I think that could give you some entry opportunities. But still, I said the valuations are pretty high, especially in brokers.
Vamakshi is here to detail those sort of directives to exchanges out from SEBI on fixed charges. Vamakshi, take it away, and then I'll come to you, Gurmeet, with specific stocks.
Well, absolutely. SEBI has issued a circular and has directed MIIs, that is market infrastructure institutions, to discontinue the practice of levying slab-wise fee structures. Now, SEBI has advocated that the charges levied should be uniform and must not be based on volumes, and this circular will come into effect from October 1st, 2024. Now, let me just give you a brief context. As per the current slab-wise fee structures, for example, if there is a broker with a monthly premium turnover of over 2,000 crores, the applicable exchange transaction charges should ideally be 29.5 rupees per lakh of premium turnover charged on a monthly basis. Brokers, on the other hand, mostly charge their clients 49.5 rupees per lakh of premium turnover, which is charged to them on a daily basis. Thus, roughly, brokers earn rupees 20 per lakh in the process, while this happens when the premium turnover crosses the 2,000 crore mark for the month. So this is one source of income for the brokers, and for discount brokers, this accounts for nearly 15 to 30% of their top line, and for some other deep discount brokers, it is a much significant amount of 50 to 75% of their revenues. And with this new circular now coming in, the brokerages, especially the discount brokerages, could see an impact as far as the top line is concerned. Investec has estimated that Angel One earned roughly 400 to 450 crores from transaction and depository charges in FY24, which represents nearly 25 to 30% of their FY24 profit before tax. However, they believe that the company could partially offset it in case it decides to start charging 20 rupees per order as brokerage, and therefore they could sort of negate the impact of the circular. But nevertheless, given the circular is expected to impact the top line of most of these discount brokers, Angel One particularly is in focus.
Thank you very much for that, Gurmeet. We've seen the day one reaction today, 9-10% gone on Angel One. Do you see this pain play out over the next, maybe 1 or 2 quarters? Because even though there are mitigating factors, they can go ahead and increase, the transaction value and the price. It will still take some time for them to compensate the kind of loss that they're going to immediately see.
No, absolutely. There will be near-term impact. So we are keeping on radar, as I said. So, like, for example, Motilal Oswal Financial Services is on our radar. They gained market share, almost 250 basis points in retail and wholesale as per our channel checks. Second, they have a very good AMC business, almost 30,000 crore equity assets. And AMC business has very high ROEs. You almost make an annuity kind of an income, and they are predominantly equity based. So obviously broking contributes the bulk, but AMC business is now picking up scale. They've made some good changes in fund management. But I would like to wait it out. There could also be SEBI action on derivatives. Now, if you see derivative volumes in India are now 99.6%, and only cash is just 0.4%. Compare that to US and other markets, I think they are far more higher, and I think regulator is concerned, and rightly so, because there's too much speculation going on. So I think there could be some overhang there as well on both brokers as well as exchanges. So better to wait it out and probably, as I said, be on depository side more and market infra plays like CAMS of the world, even AMCs. Some of the AMCs are pretty reasonably valued. Including Aditya Birla, etc. So be on that side right now on financialization and just wait this out.
All right. Hi, Gurmeet. Good afternoon and good to see you in. What about solar industries? Now, I'm looking at our CNBC-TV18 page, and one of the articles out there state that solar industries is now 1 lakh crore in terms of market capitalization. That's been one of the stocks that you have been positive on, I think, for the last couple of years or so. But at these prices, what's the view?
So Nigel, I think sometimes you get lucky, and I think God is kind. We entered solar in 2016 when price was in 3-digit. So almost been 15-16 bagger for us. I think what they have done well is the defense business as well as the basic growth in explosive business. I think recently this particular move today is related to CBEX 2, where they have developed a new explosive system which is much better than the conventional system where you use TNT. So that particular thing has got approved. Their defense book is still 12%, and I think my sense is it could be 25-30% in next 3 years, which is both which very margin accretive. So they are expecting a very large order in Pinaka rockets. They are in hand grenades. They are in ammunitions. They also have some exposure to few subsidies which are in the private rocket launch space like Skyroot. So it's a classic turnaround how a bulk chemical explosive company can become an innovative defense as well as other play. So we continue to hold, but I agree with you. Some valuation, obviously, the valuations have really rocketed. The near-term support could come from the Motilal Defense Passive Fund, which has almost collected 1,800 crores. And if you see the top three stocks, which is HAL, BL, and Solar, that's almost 60% of the index. So some of it could be flow driven. I think the fund is supposed to get deployed this week. So near term, I think the volumes, just the money supply will support it. But I agree with you on valuations. May not want to add more, at these prices.
All right, Gurmeet, how are you all playing telecom? These price hikes have come about, but actually the stocks are under some pressure for a variety of reasons. For Vodafone Idea, the street believes that maybe, in fact, most of the bullets are fired. At around 18 rupees, maybe it captures some part of the upside. On Bharti Airtel, there's another reason. There's a fear there's going to be a large trade. But I think maybe, in fact, since it's a promoter entity that people are talking about, it could possibly be we are already in silent period. So at least till the results, we may not see that large trade. For the time being, though, Bharti Airtel as well is down close to on 2%. What's your view on the telecom space? And if you could help us with how are you all playing it?
Extremely constructive. I think this tariff hike was long due. I think you will see massive re-rating, and this would be more medium term. Telecom has always been a capital guzzler. Continuously. So for the first time, if you see somebody like Bharti, their cash flows are exceeding the capex and the dues by almost 12,000-15,000 crores a year, which means they'll be deleveraging. So there is operating leverage played out. There is financial leveraging played out. The wireless business continues to be strong. I think broadband is something I'm extremely constructive on. We just have about 2.5 crore houses with broadband. The potential market size is 22-23 crore households. I think this number can get to 7-8 crore. There's some pricing disruption needed here. I think that's something in my view could be a big growth driver. Also, we are looking at the telecom infra and the digital infrastructure. So one is it's like the rental business of telecom, which is Indus Tower, where you just make rent and money through maintenance and OMCs through telecom. Second is the software part of telecom, where Tejas is trying to develop a technology which the way China and US did, when they launched new technologies. A lot of smaller nations are still at 3G, like Africa and other places. So Tejas is actually, it's more of a bet, leap of faith. Will we be able to develop that or not? And then we have something like a Tata Communications. So we're trying to play the complete value chain in terms of not only the telecom operators, but let's say the infra providers, which are somebody like a rental business, the software business, as well as the overall, wireless and communication business.
All right, Gurmeet, got that. Good conversation with you as always. Thanks very much for the perspective on all the businesses and sectors and the companies that we have discussed. You have a good afternoon, and we look forward to the next one. We do have to take a break. On that note, we'll come back on the other side and then get chatting with Tushar Pradhan of Hexagon Partners on the other side, get some more perspective on the market.
Welcome back. Wipro is the top Nifty gainer today. It's a rally of more than 2.5%. Yesterday, it was the double upgrade by CLSA. And today, IIFL has upgraded Wipro to an add. They're saying there is limited downside. Nomura too has upgraded Wipro to a buy from a reduce, and their target price stands at 600 rupees. A couple of reasons. One, after 5 consecutive quarters of a top-line decline, in the current quarter, the company is likely to report a flat growth. We did a quick dipstick survey in terms of the expectations and flat revenue growth after 5 straight quarters of compression. Secondly, even the Q2 guidance. Wipro, remember, gives you a quarterly guidance, is likely to be positive. 0 to 2% is what many analysts are calling out. Third, remember the company won a large deal of $500 million, and this is the largest deal that the company has seen in the last 3.5 years. They haven't seen a $500 million plus deal in the last 3.5 years, so that's a positive sign under the new CEO, Srinivas Pallia. And fourth, is there hope of a buyback? The last buyback closed on the 29th of June, so the window is open. I just pulled up the Nomura expectations for the kind of revenue and margin rebound that at least they are anticipating for Wipro going ahead. So they're saying FY25, don't expect too much, flat revenue growth. But in FY26 and 27, you can expect growth to rebound to 6.9 and 8.5% with progressive margin improvement. They closed last year with 15.2%, but in the next 3 years, margins can expand to 16.6%, closer to, they've always had an aspiration of getting to 17%, so they could get closer to that. That said, not everyone's convinced. Goldman Sachs today came out with their preview note. They have a sell call. Their target price is at 440. Morgan Stanley says Wipro stock has run up, making its risk reward relatively less favorable from current levels.
Right. One by one, right? I mean, stocks in the not just IT services space, but of course, rotation has been a constant feature across the market. But here, it's showing up in some form in IT as well. Tushar Pradhan is with us, director at Hexagon Partners. Tushar, good afternoon. Good to have you with us here. Thank you very much for your time. Since Rima was explaining what's happening with Wipro, and of course she's kind of put out expectations for IT services, etc. What is your sense? I mean, is it just a trading kind of a move we are seeing pre-earnings, or as some at the margin have said that maybe H2 perhaps will mark the turnaround, real turnaround, not stock turnaround, but business turnaround?
I don't really know much about the specifics, but I would think that IT has overall been a little bit of an underperformer throughout this blistering period of stock market activity. But I would still think that there is a reason for IT companies to be valued in the right sense, but may not be for the reasons that some of the other companies are being valued. So. One of the things that stand out are industrials, say, for example, even the defense companies. I mean, they're standing out and the performance is because of substantial revenue increases, order inflows, which are of an order which we haven't seen before. Now, nothing like that is happening in the IT companies. So essentially, we have these very mature cash flow oriented companies, which are going to grow at a very certain stated rate over a period of time. So I think these movements in stock prices, over a day or two, I think it's maybe people are just reading too much into it, or maybe I've just become a little more cynical about these movements in the short term.
IIFL today titled their report, valuations have rebounded, but demand has not. So they're still taking a bit of a cautious stance. But I wanted to get your thoughts in on defense. Before that, the Ministry of Defense has taken an important decision in the first 100 days. The ministry has notified a 5th positive indigenization list comprising of 346 critical defense items. Sources tell CNBC-TV18 the Ministry of Defense would like to move aggressively on defense indigenization, import substitution, exports and development of high-tech weapon systems for robotics and electronic warfare. Parikshit joins in with the details on this. Parikshit.
Yes, the Defense Ministry has notified the 5th positive indigenization list. This includes critical raw materials, spares and component systems, subsystems and assemblies, sub-assemblies of weapons and weapon systems as well. A total of 346 items have been identified by defense PSUs like Mazgaon Dock Limited, Hindustan Aeronautics, Bharat Electricals, Bharat Dynamics Limited and BEML, among others. The total import substitution value of these products would be approximately 1,000 crore and more. These items will be procured only from Indian vendors after the timelines mentioned in the notification. For all these goods, the indigenization timeline is anywhere between December 2025 and December 2028. The MOD has already indigenized 2,972 items out of 4,606 mentioned in the 4 earlier indigenization lists. The 5th list has items like diesel engines and integrated platform management systems for submarines, components for light machine guns, light field guns, Dhanush artillery gun for that matter. Close to 100 components used by T-90 battle tanks are also mentioned in this list. Also, components used in LCA, Su-30 MKI, Dornier, Jaguar fighters. Also, shipborne unmanned aerial vehicles for anti-mining operations are also there. Sources also add that the Ministry of Defence is likely to put greater emphasis on self-reliance, innovation and indigenization in defence sector in the NDA government's 3rd term. The government will move forward more aggressively with the indigenization and import substitution plan. The ministry is also targeting an increase in export footprint from 106 nations currently to 135 nations in the next 5 years. The MOD and MEA will be intensifying efforts to engage with friendly nations to export all kinds of defense equipment which is manufactured indigenously in India.
Parikshit, so for all these components, products, etc., do we know what is the aggregate sort of value of these products sort of purchased every year? I mean, to give us an estimate of what this is as a size of opportunity will mean if it's made here now?
Well, what the government has been indicating that these are products, all these 346 products which our defense PSUs use for different weapon systems, they are all imported from other parts of the world. And if we manage to make them here in India, we will be saving anywhere between 1,000 to 1,200 crores. So this could be the amount that we would save. The exact amount we're yet to know, but we do know that the orders will go to all the defense manufacturers in India, also component manufacturers. There are big MSMEs, startups, which are now joining the defense ecosystem. So all of them could benefit from these orders between now and December 2028.
All right, Pariksha, thanks a lot for that. Well, hi, Tushar, and good afternoon. Good to see you, Ben. What's your view on some of these defense companies? That's been a solid theme, if you played it and if you got in at the right time. But currently it appears some of these companies are factoring in maybe the next 2 or 3 years earnings as well. Your view at current reckoning, for someone is in, they stay invested. But if someone wants to get in fresh, then what would your advice be?
No, I think, generally the stock markets kind of discount future earnings or future possibilities. Now, in this case, I think the market has been fairly efficient in pricing those in those stocks. And definitely there was a surprise because many people did not understand the magnitude of which these orders are likely. Last, we've had, these efforts for these defense companies to start producing domestically. But I think with this huge thrust on import substitution and make in India and the whole defense, most of the market participants were surprised with the stock market movements initially, but now we are getting to the point where we now understand that it is really now based on, solid orders which are likely to follow. Now, there is a gap between where the market discounts it and the actual news come. So the oldest adage in the market is to buy on rumor and sell on news. So typically, this is where we are coming, where the rubber hits the road and we actually see the extent of these orders. I think anyone coming in fresh needs to understand where the valuations are today. What is the expected earnings growth now as a result of these likely to reflect in the next 2 or 3 years, and then take a call. I think it's very, very important to understand that eventually the stock price is a measure of how many earnings are there in the future. And if these earnings are somewhat which can be modeled, you will get a fair idea of whether you're buying at a good price or not. So I think I would say caveat emptor, especially for people coming in fresh at this time.
Okay, that's the sense on the PSU space, given the huge rally. Tushar, great to have you on the show as always. Let me expand that thought on the market as a whole, because it's been a phenomenal year, right? 2024 so far, 6 months have been great, building on what was a fairly good 2023. and the market continues to move forward in uncharted territory. So, I mean, on a deeper and wider level, really, what are the possible risks, perhaps, that we should consider? Because I think a lot of people are grappling with how to make fresh purchases now. The smallest of dips are getting bought. There's so much of liquidity sloshing around. So is that becoming a bit of a challenge? And how should one sort of consider and wrap their heads around these things?
No, I think some time ago I heard an adage about the traders in the market, where they say brains and a bull market have very less to do with each other. So I think if you're trying to make sense out of what's happening today in the market, maybe there's not much there. But I must say that there are significantly important positives about India which are happening, which I think should make us realize that while we are trying to find out what could go wrong, maybe we're missing about the magnitude of this move. One of the things that has been announced, of course, is the inclusion of the bond indexes for Indian sovereigns. Now, what is that going to do is to bring in a very steady, inflow of money, which is fairly visible into March next year, which is almost guaranteed. On top of that, the kind of interest rate movements which we're expecting in the US does indicate that an interest rate environment which is slightly lower than where it is now is likely to happen in the next 6 months. Now, typically when interest rates globally start to come off, asset markets generally react by moving up. We also have a significant continuation of political, I would say, imperatives in India, which means that whatever we thought about is likely to continue to happen on an industrial and a government spending scale. Now, when you put all of this together, and the fact that, yes, the last 2 years have been good on the basis of very significant earnings growth, could we imagine that earnings growth from here on is also going to be around 15 to 18% for the next 3 years? Now, nobody's really modeled that because it's too far into the future and it's too, I would say, wild to guess that that's likely to happen. But if that happens, I don't think the market is very expensive. So I think it is a matter of, I would say, perspective to say that are earnings going to go down or stay flat from here? If that is the scenario being built, then maybe the market is expensive. But what if we are talking about a sustained earnings momentum, which will take us the next 2 or 3 years to kind of plateau out? What if? Now, that is something which I think most participants at the moment are not really thinking of. There are, of course, models which indicate that earnings growth is going to remain robust for Indian corporates. But for how long? Most of the analysts and the research reports go probably about 6 months or 1 year into the future. They don't go beyond that. But is the market likely to benefit from the fact that these earnings growth numbers are likely to sustain so long? So I would think that investors need to understand that if they've chosen the equity asset class, they are in for the long run. And I think in the long run, even if there is a wobble or a drop in earnings for any of these years, I don't think the overall valuation is startlingly expensive. I think there are pockets of over exuberance, but I think that is likely because of the kind of earnings volume which we're likely to expect in those companies.
So Tushar, so what you're intrinsically saying, if I got that right, is that if you're going to imagine at least 15% sustained earnings growth for the next 3 years, then at a headline level, this market doesn't look that expensive. So let me just ask you a quick follow-up. Which are the sectors where you think we'll get the maximum of this earnings outperformance? Could it be banks? Could it be IT doing a certain turnaround? Will it continue to be these capex companies? So where will the earnings kicker be? And now we're talking a 3-year view.
So I think I've said that before, that we have domestic industrials, because what is going to really fuel this economy going forward? It's largely going to remain domestic-led. So anything which has domestic earnings growth inbuilt into their business models, I think that is something which looks very attractive. I just left out one more point on one of the things which have happened internationally for us, is that the FPIs have been fairly circumspect on India over the last few years, and that's not because they don't like India. It is the fact that the regional funds which have India in them have been very unpopular. with domestic investors abroad. So as a result of which, there will be a time where the global investors will also throw in the towel and say, look, we can't ignore India. Let us put money now back in. And I think that is the last vector, which I think over time, in addition to all the domestic fundamental factors, is probably going to remain a very, very large positive going forward. But coming back to your question, I think, in a sense, domestic sectors focused on industrial manufacturing and essentially about capex are likely to remain very interesting sectors because their jump in earnings is very substantial. And then towards the end of a mature bull market, 2 or 3 years into the future, is I'm sure FMCG consumption and all those sectors which generally try to come at late stage of a bull market will also stage a rally. So I think over time, you've got to be prepared for rotation. And any sector that you identify now is not likely to remain a perpetual favorite. So that's the caveat I will put in.
All right, final question, Tushar, before we let you go. I briefly remember that we discussed telecom. I don't think you were very optimistic on the price increases going through. What's your view on the telecom space? Because most of them have gone ahead and pushed through the price increases, though the stocks already ran up in anticipation. So I wanted your view on that now since the price increases have come about.
Yeah, that's been a surprise for me. And I think, in a sense, probably they're a little bit behind the curve already, because as you can understand that India continues to remain one of the lowest, or let's say the cheapest tariffs for telecom anywhere in the world. And counter that with the kind of capital expenditure which is needed to keep up with the advances in telecom infrastructure. So if you're talking about 5G and then 6G and God knows how many Gs later on, that you will need to continually keep putting capital to be able to sustain your earnings going forward. So which is a little bit like a treadmill. So while you'll get in between very large increases in free cash flow, because then the timing is such that you haven't invested so much, but your price increases dramatically increase reported profits. But as soon as these reported profits accrue, you will have another cycle coming up for capital expenditure, which is significant. So they remain somewhat, I would say, operationally leveraged, where something like an aircraft company where after the investment is done and you have significant improvement in occupancy, you certainly make a great upside, but then you need to add more aircraft and then it continues to roll on like that. So I would think that it is definitely a part of an overall portfolio allocation. But to think that things have changed dramatically for telecom and then just rush in would not be my way of looking at it.
Okay, thank you very much for joining in, Tushar. Some PSUs are moving up. IREDA should come up for your screens. A massive 4% up move on big volumes. NBCC has seen a sudden spike, and paper stocks led by JK Paper continue to move up. So Pudumji Paper has a 16% gain, Andhra Paper is 5% up, West Coast up close to about 8%, while JK Paper is now approaching a 20% gain. We'll get into a break on that note. On the other side, a few BTST calls from our technical experts.
Welcome back. Well, we're not seeing any kind of recovery. The markets are flattish. The Nifty Bank as well, more or less flattish. But a few stocks are moving around. I think NBCC should come up for you. That's moving and moving with very good volumes. So that's one of the top volume movers. And Indus Stars, that was actually holding quite strong at the beginning of the trading session. That's come off roughly around 3.5% in the last 2 hours or so. From around 395, it's down to around 382 rupees odd. Midesh Thakkar is back with us. Midesh, what are the buy or sell calls you have for us with the reverse trade in the next few days?
So, Nigel, one is SBI. The Bank Nifty is weak, so State Bank of India is on the STVT side. Keep a stop at 832, look for targets of 810. And NBCC, you were just highlighting, it's having a good breakout. So I would recommend not a BTST, but more of a 2-3 day kind of a trading buy. Keep a stop at 157, look for targets of 175.
Okay, got it. Mitesh, thanks very much for those calls. Let's move on and get to our next market guest. We've got Jay Bala of Cash the Chaos joining in. Jay, always great to have you with us on the show as usual. So it's been really up and away. Today is a day of slight consolidation because banks aren't playing ball quite as much as IT is. But just, let's start with the levels and the gravity-defying moves. I mean, we're talking 24,000 plus on the index. What next are you tracking?
Hi, Surabhi. Good to be here. The next level for the Nifty is at about 24,336. And the markets have come pretty close to it. And about 24,336, I don't think it's going to get right now, but that's about 24,600. As long as the Nifty stays about 24,350 on a closing basis, 23,350 on a closing basis, the trajectory remains up. But it's very obvious to everyone that the markets are quite stretched. But watch out, if the Nifty were to drop below 23,350, it will start showing signs of correction. Probably there is one concluding sequence of higher high to come through in this leg. And at this point, the vulnerabilities for the Indian markets possibly can come from the realty and the capital goods sector. And from a global point of view, the USD JPY cross is trading really, really dangerously. And my objective has been since 2022 about 164. If it were to exceed 164.5, 165 on a closing basis, we'll have a real crisis, currency crisis on hand. And that will have impact on all equity markets. So the current global macro, most important factors, watch out for the USD JPY cross.
All right. Hi, Jay. Good afternoon. Good to see you, Ben. Since you're speaking about currencies, for our audience out here, we track the Indian rupee as well as the dollar index. So what are the levels you're looking at on both those two?
Yeah, Indian rupee has been untradeable, and it's better to avoid it completely unless you have, a hedging for your business purposes. It's a complete avoid. It's like behaving like a peg currency, so avoidable there. When it comes to the dollar index, again, the contribution is definitely going to come from the USD JPY cross. 106.5 is a very important level. The fact that dollar index is already trading about 105.75, which was my previous important level, it's already indicative that there is some strength possible, given that European elections are around the corner, and further forward we have the US elections also forward. So that is palpable strength in the short term for the dollar index, but watch out for 106.5. That's the most important level.
Okay, all right, got that. Jay, what about individual stocks? Give us some stock ideas. Normally you give us two, I think. So let's go through those two.
Yeah, I have two, one from the large cap and one from the mid cap, small cap space. The large cap is from the pharma sector. I still believe the pharma sector has got higher highs to come through. So I picked Dr. Reddy's for today's setup. I have a stop plus at about 5,900 and a short to medium term price objective of about 7,025. I think it's got an incomplete structure, and hence the structure will complete around 7,025. And in the small cap space, mid cap space, it's EPL, formerly known as EPL Limited is trading at about 200 odds, and it's got a breakout. It's been underperformer since 2021. I think it's starting to catch up with the rest of the market. Today's breakout has got potential to go back to all-time highs, but we'll have a conservative estimate of about 280, 290 with a stop loss of about 180. SL Pro Pack.
All right, got that. Jay, stay on. We have more questions for you, but we also need to slip into another quick break. We'll come right back and then focus on some more stock ideas and also some final aspects of today's trading action.
6 to 8% is a very good growth, right? And the key factor which is actually driving this growth is, at least in our type of customers, the economic recovery is finally reaching them. And there is optimism. We can also sense that optimism from the way the terms in retail financing are coming out. People are willing to take longer term loans, and which reflects a certainty of future income flows. I think 6 to 8% growth is a good growth too. It's a very large industry, and if it grows at 8%, it has got very good consequential impacts. Point is there that for this customer who's got 30 to 40,000 salary per month, and where a motorcycle or a two-wheeler is an absolute necessity, over there to have a 28% tax is, very harsh on the customer. Because don't forget one thing, the moment a person acquires a motorcycle, that person's productivity really increases, whether it is access to the farm or access to a job in a nearby town, a whole new world opens up. And therefore, from a social point of view, and even from an industry, triggering off an industry sort of growth point of view, there is a strong case for reducing the GST large market of Nigeria. That is still in the negative zone. But having said that, there is recovery even in Nigeria. Because of inflation caused by devaluation, the demand is muted, though recovering. And all depends on now the stability of the currency and people getting used to the new normal and things coming back. So it's going to be a gradual progression.
Welcome back. Well, at the bottom of your screen, you're getting some news that the government may opt for around a 5 to around a 7% stake sale in Concord, as per sources to Money Control, after the tepid response to the strategic stake sale. So maybe, in fact, you just keep an eye out on that stock. It's down a little bit in trade, so keep an eye out on that one. But the other one that's doing very, very well actually is IRDA. Just take a look at that. Yesterday, I had the management with us. They were talking about, seeing a good pathway, a good runaway in terms of growth in the next few years. they also said that there could probably be an follow-on issue in the coming year. So that one, in fact, now IRDA is up close to around 7% as we speak, and most of those volumes have happened in the last 60 minutes. But a good time to get some market opinion then. Earlier today, we spoke to Pankaj Muradka, the Chief Investment Officer at Renaissance Investment Managers, to discuss the market fundamentals and his top sectoral picks. Let's hear him out.
From an investing point of view, incrementally, we've gone overweight in IT as a sector over the last few months because we think probably the IT is a classical global cyclical. The worst of slowdown probably is in the price, and probably we think the business will pick up from second half onwards, and we see a strong IT spend cycle globally as well. On the whole investment cycle, while there are a lot of opportunities across what you say in terms of PLIs and within PLIs across, let's say, auto ancillary, electronic manufacturers, EMS space, and so on and so forth. And we have exposure to some of these companies in the EMS spaces, right from Dixon to some of the other smaller cap companies as well. But I must confess that currently where we stand from a market valuation perspective, all of these stocks are pricing in the next 8 quarters of growth. I think stocks in the sector, I would say, are priced to perfection or richly priced. So our whole approach is to continue to hold what we are holding in the sector, but not incrementally add, because valuations are rich. From a slightly more near-term perspective or a medium-term perspective, I think consumer discretionary looks more attractive from a risk-reward perspective. Having said that, we continue to remain grossly underweight HDFC Bank versus its weightage in the indices. Because we find one, better opportunities within the banking sector, and probably from a bank sector as a whole, we continue to remain underweight because we find better growth opportunities outside of banking sector than within the sector. And it's apparent now, I believe that banks is not the lead growth sector in India in this cycle, and probably it will continue to be so.
Okay, the street is awaiting the shareholding pattern to be released for HDFC Bank, because if the foreign ownership has fallen, then it opens up headroom for MSCI related buying, which according to many analysts in the street could go up from about close to $2.5 even up to $4 billion, and perhaps some amount of buying is taking place in HDFC Bank in anticipation of that. But I think the immediate trigger is the shareholding to be released to know if that headroom has opened up.
This Ambit has just come out with a note, and essentially we don't know when the shareholding data will be released. It could be any day now. Markets are expecting it will come through. And Ambit is saying, of course, if the foreign headroom as calculated by MSCI increases sufficiently, they're saying if it goes up from 24.95 to 25.54, it'll be sufficient for MSCI to raise the weight of HDFC Bank. And based on that, as you said, it'll be about $3 billion, right, of buying, which is about 10 days of delivery buying. It could be meaningful. And, whenever the date of MSCI implementation is, that is another matter. But the point is, in these kind of cases, there is already a fair bit of pre-positioning which happens. One before the announcement, one after the announcement, one, of course, by the time the date of implementation comes through, it's all mostly done. That's well advertised now, but we'll see if this comes through or not. 1730 is where HDFC Bank is now trading at. Jay, just one point on the Nifty. For you, the make or break level is at, was it, you said 23 something, 23,350 or so?
That's right, Prashant.
That's a far way off, isn't it?
Yeah, blame the volatility that we have seen post elections. The markets, when it starts to come down, the moves have been quite pronounced, and that's pushed support levels not to tangible close by levels. You need to be keeping quite a bit of buffer so that you don't get trapped on the long side. If you recall, even after the elections didn't go out as expected, I wanted to make sure that the markets close below the support level. So you need to be extremely cautious. Turning when the markets turns from a bullish phase to the bearish phase, you need to give enough sufficient room so that you don't get caught on the wrong side.
Okay, Jay, what about on IT? There's been a lot of momentum on IT on the way up over the last 1 month. Is there any stock which still looks attractive?
If you recall, last time, Rima, I had picked out Black Box, and we've seen the stock go up to one circuit and then about 12% yesterday. So that still remains a top pick for me within that space. formerly Avaya Global. And this has potential to scale somewhere about 500, 525. And there's a slight change of stance for me when it comes to Nifty IT sector. Now, it's opened up the possibility of fresh all-time highs. But if it were to, Nifty IT were to clock 39,826, slightly less than that, and then come down, that'll be very bearish for the medium term. So the positive is that it's slightly opened up all-time highs possibilities because the index is trading past 36,500, which was my critical support, so critical resistance. But it's a very choppy overlapping move. So it is raising the potential from the possibility that April 2023 low was marking the final leg of an ascent that will result in an all-time high, but could result in a medium-term top. So I'm very watchful about what's happening in the IT sector.
Okay, all right, Jay, we leave it there. Thank you very much for your time. Great speaking with you. Appreciate it here on CNBC-TV18. The Nifty up on your screen. We'll end about 24 points lower. The bigger cut, of course, is the Nifty Bank, which ends, I think, about 0.7, 0.8% down. Despite, of course, HDFC Bank trying to cheer things up. That stock ends about 1.5% higher. But everything else was down there. Bajaj Finance, ICICI Bank, Axis, IndusInd, Shriram Finance, everything in the the Nifty financial space was down and out. Auto stocks were down as well. There was Tata Motors and Bajaj Auto, which saw a bit of a pullback as well. There were names like Bharti, etc., which were under pressure. So some profit booking continuing in telecom. Guys.
Okay, let's run through some of the big gainers then. L&T tops the chart today, 2.7% up. IT continues to see buying. So Wipro saw a few upgrades. Wipro was up close to about 2% And then you had in a Tata Consumer, a Coal India, Hindalco, Cipla, across various other sectors.
Okay, mid-caps a day of cool-off. The index has ended with a cut of about 430 points. So where did the money come off the table? Well, for one, a lot of the market infrastructure institutions, particularly brokers, who might get hit with the new norms coming in from SEBI in terms of the transaction charges. Angel One down 8.5%. Actually, even the others, Motilal was down 4%, MK was down about 4.5%. BSE itself has lost about 3% So some,
IIFL Securities was down. There's a broker called Share India, which is also listed.
Yeah.
But they're big prop sort of traders.
So big volumes.
Big volumes. That was also, I think, down about 6%.
Yeah. So I guess the market intelligence right now saying that brokers with bigger volumes, which were earlier getting a lot of discounts from maybe some of the exchanges, perhaps that'll have to change, and therefore that was showing up in stock prices. Aside of this, the other key losers today, for instance, Chola Finance was down quite a bit. Century Ply lost 3.5%. So these were the names. Subros lost about 4.5%. But then having said that, you also have the gainers. Obviously, on the other side of the screen, today's listing, Allied Blenders did well, 13% higher. And the paper stocks really up in a way. Something really causing a flutter over here. So, for instance, Andhra Paper, West Coast Paper Mills, Malu Paper Mills, 5 to 7-8%, depending on which one you're picking up. Overall, a pretty mixed bag for the mid-cap market. Headline index ending absolutely flat with about an 18-point dip on the Nifty. And with that, we're out of time on this edition of Closing Bell. Thank you very much for watching. Do stay tuned. Markets Forward will take all the action ahead.